Hello, 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 hello. Welcome now, Stock Trades. How's everybody doing today? All right, ladies and gentlemen, in this video, we're going to go ahead and talk about the HIMS stock. Again, we've mentioned this company before. Interestingly, a lot of folks on our stock terminal have been on top of this company for quite some time. And we're going to go ahead and we're going to do a deep dive in this video. This is going to be a pretty deep dive. Happy Thanksgiving. This is a Thanksgiving special I wanted to put out. Hope you're enjoying your Thanksgiving. I'm having a wonderful time. And what better thanks than to go ahead and talk about this company, I would say, right? So I really had a great time, studying the company and working on it, right? So we're going to split this and show you different pages of research that I created specifically for this company, as these are deep dives. And I can assure you that this is most likely the most deepest dive that exists in the online space, right? And for folks that are interested in wanting, again, we're sharing our research edge. For folks that are interested in wanting to know what other stocks that we believe have potential and want to see other deep dives that we have done, I highly suggest you guys sign up for our expiring Black Friday coupon code. Take advantage. Without further ado, let's go ahead and get started. So overall, this set of next two pages is the earnings conference call Q3 of the last one, 2024. So we're going to go ahead and hear. How you doing, Vladimir? What's going on? What's going on? All right. So revenue growth, Q3, up 77% year over year. Online revenue, 392.6 million, up 79% year over year. They got over 2 million subscribers, 44% year over year with their GLP-1 solutions. Now, again, as you guys know, I'm in the healthcare field. In about 6 months, I'm going to graduate as a medical doctor. These drugs, have been definitely used for weight loss, and we could talk about the mechanisms of this, but it's gotten to a point where, obviously we have an obesity epidemic. Right now, this video is more deep dive on the numbers. We will do a more deeper dive on more of the medical part of things. As you guys know, I really like those, but we'll save that conversation later. But in terms of profitability, they're $51.1 million, and which is 4x increase year over year with a 13% margin. Overall gross margins are 79%, a slight decline due to scaling weight loss solutions. Net income is $75.6 million from a GAAP adjusted basis, including a $60.8 million for tax benefit. Cash flow is $79.4 million in Q3. Cash in the short-term investments is $254 million. They did a $30 million stock repurchase in Q3 at an average price of $15.83 per share. The outlook is forecasted to be for Q4 is anywhere between $465 to $470 million, which is a plus to 89 to 91% year over year growth rate. Full year 2024 revenue projections is 1.46 billion to 1.465 billion, which is a 67 to 68% year over year. The 2024 adjusted EBITDA forecast is 173 to 178 million with 12% gross margins. In terms of the business performance and specifically its drivers, personalized solutions, there's over 1 million subscribers use the personalized solutions with 50% plus total subscribers. GLP-1 solutions has a strong retention rate of around 70% by 12 weeks versus 42% industry. This is huge, especially if you want to see the stickiness of the business. That's pretty good. Number two, weight loss solutions. Oral weight loss medications deliver 70% of GLP-1 results for $70 a month. Expansion into generic GLP-1 solutions. This is a liraglutide planned for 2025. Average, since I'm in medical school here, might as well just we learned this in medicine, but again, this is GLP-1. It is what it is, but it increases cyclic AMP, which stimulates the glucose-dependent release of insulin, right? And what does an insulin do? It binds to the tyrosine kinase receptor, and it inputs and allows GLUT4 receptors to translocate into the surface of the blood cell, or sorry, just cells in general, not blood cell. My apologies. And it overall takes in glucose, right? For folks that have diabetes. It can also be used for weight loss. All right, back to your normal stock market information, getting out of the medical side. Average weight loss is 4.1% of body weight at 4 weeks and 5.5% at 8 weeks. That's pretty damn good. And let me just kind of give you guys an 8-week analysis here. I worked in bariatrics for my medical school rotation. I'm curious to see on average, that's pretty good. Anywhere between 10 to 16.5 pounds. It's pretty good. That's at 8 weeks too. Cross specialty growth. 20% of weight loss subscribers use other specialties, mental health, dermatology. Focus on expanding multi-condition solutions to boost retention and satisfaction. So then we have this one here. These are the strategic initiatives that were discussed in Q3. Platform expansion. By the way, this video is going to have the earnings summary, the deep dive, the technical analysis, the growth analysis from 2024 to 2028, and all the way to the price target. Not to keep you waiting, this is what we think the price target is going to be in the next 5 years. Bull case $66, base case $45, base case $45, bear case $32, and recession $15.96. Again, we'll explain how we got to that level as we go ahead and break down the deep dive, right? Because numbers are okay, but again, I just posted this today during Thanksgiving, so if you appreciate this, definitely, we have more deep dives coming, and our platform has a lifetime access Black Friday sale. But just very quickly, let's go ahead and go over this one here. So, platform expansion, investments in automation and technology to streamline operations, growth of the 503A and 503B compounding facilities for scalability, personalized care. In terms of broadening access, increase adoption by underserved populations, low-income and senior communities, affordable pricing initiatives for teachers, military veterans, and first responders, future growth, R&D for new form factors, gummies, topical solutions, targeting 20% adjusted EBITDA margin by 2030. These are the questions overall. Subscriber base, around 47 to 48,000 that use GLP-1 solutions. Personalized dosing remains a strong driver, retention, and outcomes. In terms of subscription duration, average subscription length, 5 months at approximately around $70 per month, I believe. Consumers value transparency and provider support, contributing to longer retention. Pricing strategy, focus on maintaining affordability while investing in efficiency, potential for price adjustments or a new bundle offering in 2025. Overall core business strength. The subscriber base grew around 40% year over year with continued momentum across specialties. That's their core business is growing 40%. That's pretty damn good. Now, this is like, we talked about some other stocks that we did in the past. All right, so here's HIMS and hers deep dive. Telehealth innovator on the rise. So this is reshaping the telehealth landscape with its personalized healthcare solutions, really for millennials, honestly, but they're tapping into other markets. Focused on conditions such as hair loss, weight management, and sexual health. The company has demonstrated exponential growth and profitability while navigating competitive markets, like markets in Amazon, right? A record-breaking quarter. HIMS and her achieved an outstanding results for Q3. We're just going to go over this again. Repetition is the mother of learning. Revenue growth surged 77% year over year, reaching $401.6 million. Outstanding analyst expectations by 19 million. Subscriber milestone. The platform surpassed 2 million subscribers, reflecting 44% growth and remarkably 175% increase in personalized product subscribers. Profitability, adjusted EBITDA climbed to 51.1 million, representing a 13% margin. Despite gross margins measures from weight loss medications like GLP-1 drugs. Now we're going to get into the free cash flow, but this is just pay attention to this one. Generated 79 million, repurchasing $30 million worth of shares, which ended the quarter in 251 million in cash and no debt. Cash and no debt. cash and no debt. I say that on purpose multiple times. Okay. Why patients choose HIMS and HERS. HIMS and HERS stand out in telehealth market with a personalized and patient-centric approach. Key features include tailored medication plans, custom dosages and treatment designed to meet individual health goals, comprehensive support, guidance on nutrition, exercise, mental health integrated into the app, innovative tools, progress tracking for metrics like sleep and activity, fostering engagement, 24/7 care access as an in-app messaging feature ensures patients are supported anytime. This approach yields an impressive result with 70% of GLP-1 weight loss patients remaining on the program after 12 weeks, which is above the approximately 40% industry standard. Competitive landscape and growth catalyst. Amazon recent into the telehealth has intensified competition, particularly in pricing for treatment like hair loss and in erectile dysfunction, I believe, right? So, however, HIMS and HERS differentiates itself with personalized care, a model that prioritizes individual needs, fostering higher patient retention and trust. It's all about trust, right? Technology investment, leveraging AI to enhance care delivery and expand into multi-condition treatments, which is great. They're utilizing the technology of our times. Market expansion, increased focus on women's health, and diversified portfolio of solutions beyond weight loss drugs. Long-term financial potential with strong financials and a scalable model. HIMS and HERS is positioned for sustainable growth. Revenue forecast Q4 guidance projects to $470 million, reflecting nearly 90% growth over the past 2 quarters. That's why it went up, Mr. Ken. That's why it went up, right? 2025 projections expected to deliver $1.89 billion in revenue and $249 in EBITDA, trading at less than 3x projected sales. It's an undervalued stock. Analysts estimate a fair valuation anywhere between 25 to 27 per share, underpinning its robust performance and forward guidance. HIMS and HERS is revolutionizing healthcare by making it more accessible and affordable and tailored to individual needs. Its strong financial health, innovative offerings, and growing subscriber base position itself as a leader in $4 trillion U.S. healthcare market, transitioning to online direct-to-consumer models. For investors seeking exposure with this is definitely something you want to go ahead and take a look at. Again, not financial advice. Technical analysis. So the stock price recovery, the price returned to 2021 levels, showing significant recovery. The purple resistant line highlights a key point that we went ahead and talked about, which is right here. That's why there's a big gap up right there. Now, what we need to go ahead and discuss really quickly is that many retail investors started actively trading in 2020, unfortunately have limited market experience. At previous highs, retail investors often sell out, especially after a sharp recovery. However, smart money institutional investors never sell their winners. They hold on to stocks that are outperforming because they understand exactly what's going on in terms of the overall fundamentals of the business and the overall growth projections. So as institutions, as a stock reaches these levels, even more institutions are going to take notice. Very quickly, you can look at this graph where this line here is the stock price, and as you can see, a little recovered. And the green lines is the institutional ownership. Due in part by the Senate, they passed a law back in the 70s that stipulate that individuals and institutions that have over $100 million, they have to publicly release an SEC 13F filing form. An SEC 13F filing form dictates whether institutions buy or sell a stock. Due to this matter, you can basically see institutions have piled in on this company. Going back to the research, this is why it's important that we bring on more members for lifetime access, because this stock used to be $2.72. And yes, our stock terminal caught it at $2 rising up. You could go ahead and search HIMS on our stock terminal, and you could basically see it for yourself. We do not miss stocks. Our stock terminal has over 2.5 billion outputs of institutionally graded data, and nothing escapes us. Now let's go ahead and let's go to the growth analysis. These growth analysis projections were brought to you part by our stock terminal. Unfortunately, it's very difficult to see 2028 projections. These are done by analysts. You have to get a Bloomberg terminal, which unfortunately costs $2,000 a month. Let's continue. So the analyst outlines the estimated growth rate for both revenue and net income over the 2024 to 2028 period, including year-over-year changes and overall growth trajectory. From the years of 2024 to 2025, revenue is projected to grow from $1.46 billion to $2.01 billion, reflecting a 37.76% increase. For 2025 to 2026, again, these are analyst estimates, so it could be even underpinning and under valuation. But again, this is what they say, and I want to basically share it. So revenues, and again, this is part of our deep dive, part of our stock terminal, okay? So there's going to be others, but we're not going to be making videos on these because, that's just too much. That's a lot of videos to do. And it's a lot of talking, honestly, right? So revenue is estimated to rise further to $2.34 billion, marking a 16.19% increase. I'll read the comments soon. Let me just kind of get through this. 2026 to 2027, revenue is expected to reach $2.7 billion, showing a 15.63% increase. In 2027 to 2028, revenue is forecasted to grow $2.83 billion, representing a 4.93% increase. Interestingly, maybe this is them slowing down, or maybe analysts are just haven't projected that far. Again, pretty modestly low there. But if you overall look at the growth rate projections from 2024, or honestly 2025 to 2028, it's around a 94.3% growth rate, which is pretty damn impressive. From a net income growth level that is GAAP adjusted basis 2024 to 2025, the projected there was a projected decrease of 166.89 to 119.59 million, reflecting a 28.34% decline. Potentially, this should be expansion and relatively SG&A cost. Not too sure. We have to dig a little deeper under the hood. 2025 to 2026, you get some recovery. You can go ahead and read it. These are the revenue rate. These are the net income rates. Okay, I'm not going to go ahead and read all that. You can go ahead and read it because it's not going to add value. This is what's going to add value here. So what we did is we looked at the overall free cash flow of the business, which let me just give me a moment. Let me just show you. Let me just show you what I did here so you'll understand these calculations real quick. Okay. Give me a moment. Let me go ahead and put this here. And we have other stocks that we talked about. So just, all right. Here's HIMS. You could see revenues going up. Gross margins are great. Net income went from negative to positive. It just became positive on the trailing 12 months basis. Free cash flow went from negative to positive. It's 150. If you take 150 divided by 1.2 billion approximately, you get around 12.08%. That's pretty much basically stating that 12.08% of the revenue falls into free cash flow. The problem is we don't know the free cash flow of the future, but we know the free cash flow of today. So if we take 12.08 and multiply it by the expected revenue projection of what analysts suggest, then we can get an estimation of future free cash flow, in which then we could type into our intrinsic value calculation and calculate the price target of a company by going 10 years into the future and discount back at a 10 to 15 to 20% discount rate using a 2 to 3% perpetuity model divided by the number of outstanding shares. Ladies and gentlemen, this is not a pre-recorded video. This is a live, okay? I'm not reading off of a script. I guess you could say I'm reading off of this, but I'm telling you this because I've done this for over a decade, and I want to teach you how to go from zero to hero so you can become a multimillionaire, okay? And this is how big money and Wall Street investors invest like, all right? And I'm just showing you and I'm democratizing how these people do it. By doing this, you could basically see you have an estimation of free cash flow anywhere between 176 million in 2024 to 242 million in 2025, 282 million in 2026, 326 million in 2027, and 342 million in 2028. You can go and read the key takeaways, but the big thing here is you do the intrinsic value, and we went ahead and took the 94% growth rate that was around 3 years, divide that by 3, you get 30%. We used the current free cash flow, which is 150 million, which is right here, divided by the number of outstanding shares, which is 217 million. By doing that, you get a bull case of $66.23, a base case of $45.17, a bear case of $32.91, and a recession case of $15.96. So I'm very excited to see kind of where this goes and how we're going to basically take advantage of this. But overall, I expect the stock price to go higher in the years to come. And this should be serving as a kind of deep dive to show you, again, everything that I've done and all the data that I've received. I got it from our stock terminal that you can have lifetime access to. This is also included. So the point is, the problem with the stock market is many people don't know when to get in. People think that because it ran up, let's go to the technical analysis. Because it ran up to here, they think that, the game is over. Well, just look at Palantir. The game ain't over for Palantir. And unfortunately, a lot of retail investors don't understand that, but hopefully in this video, in the next coming months to years, this will serve as an educational principle so you can add it under your toolkit. And yes, so the issue is when most people buy a stock, they don't know if it's undervalued or not. Like, how do you know this is a good time to get in? How do you know this is a good time to get out? You got to calculate the intrinsic value. And unfortunately, most people don't know how to do that. Luckily, our platform teaches it. Okay. All right. So there it is. I mean, if it definitely gets to that, that'll be good. And I think that announcement of Amazon services caused HIMS to drop in the short term. Yeah, I remember that. I agree. It was a good buy the dip opportunity. Gap fill potentially. We'll do technicals right now. Insiders selling at these prices while they can. Well, institutions are buying, right? So again, and you have to look at the insiders. I got one bar here, so hopefully you guys can. Here, look. Can you guys see that? Oh wait, now it's 3 bars. Just now it's okay. Now we're good. We're good. I was going to show you. Okay, so hopefully you guys can hear me. Okay, yeah. Well, the thing is, institutions are buying, not selling. Yeah, Michael, I don't know, right? So I mean, this company checks all the boxes, and I definitely see the potential here, right? And it just became profitable too, right? So it's pretty good. But again, not financial advice. Take everything I say as a grain of salt. Let's go ahead and open up the terminal real quick, and let's kind of see what's going on. Let's do a Monte Carlo sequence projection for the HIMS stock. Let's see there's no simulated projections. Let's go ahead and look at the overall minute chart real quick. Then we could go ahead and take a look at the hour chart. Then we can go ahead and take a look at the day chart. Whoops. Then we could take a look at the week. We got the day chart. Now we can go ahead and take a look at the weekly chart. All right. So, again, this is part of our stock terminal. Again, you get access to this lifetime. I highly recommend you take advantage of this. We just released our stock market picks. These are pretty damn good picks. Again, not financial advice, just from an educational perspective. We have our Black Friday coupon code. You go to alstocktrades.com, lifetime access. For our American and Canadian customers, we do offer a firm. Shout out to our firm for sponsoring our platform. And also just a big, this is a pretty significant sale. So I would say, definitely take advantage. And thank you for all the folks that have taken advantage. Happy Thanksgiving to you all. All right. So here's the overall minute chart. And again, these are AI graphs, support and resistance lines. So it's consolidating and building a support line here at 355. We got a resistance at 33.84, as you can see here. But overall, these are the other layers that you got, if you guys are interested. Again, 30 to 34, $30.34, building some form of support. We got a rejection at 31.35. And we got a major support in 1942. Definitely strong support level there. Double double bottom there. Then for the weekly, you got basically again strong support level at 932, and then now it's shooting up. So I think now the cat's out of the bag for this one. You're going to see institutional investors start piling up. So I wouldn't be surprised if it does go higher. Really quickly, I'm just out of curiosity. Let's go again. Part of our stock terminal. Let's go ahead and take a look at the price target to see what's the consensus that Wall Street has for the company. Again, this is all data provided by our stock trades or platform. Okay. So you go ahead and open up HIMS. Let's see what we have. Anything? So we got a target high of 28, target low of 8, target consensus 21, target consensus 21.6 with a target medium 23. So, we're going to see what other analysts are saying, and we'll see if they update their price targets. But overall, nothing yet, and I'm sure they probably released some in the most recent term. Just going ahead and just searching the stock terminal real quick. I'm sure we're going to see some of our members do some due diligence on this, but let's just kind of again, these are like news that that's part of HIMS. CEO Michael's replacing this is November 26th. One of our members looking at the financials for HIMS. Very good. Very good. Let's see here. Let's go next. Oh, there it is. November. So this is Bullseye. This is our AI confidence level here. I'm not going to show the most recent ones because it's not fair for our paying members. But this was November 22. It issued a signal. Let's see how it did when it issued the signal. So the signal was right here and it shot up. So let's go ahead and do it manually. November 22nd, it issued a signal. Yeah. Yeah, so it pretty much popped. And again, this is the perks, a part of our stock terminal. You get access to the Bullseye. And whenever you get the fundamentals coming together, the technicals coming together, the intrinsic value coming together, and the options put to call ratio coming together in terms of there's more calls and puts, the institutional SEC 13F filings coming together, and then you have the Bullseye, which is almost like a quant level Renaissance technology type technology that you have at your fingertips. You get to a point where you have all this institutionally graded data where you can't lose, right? And the goal of investing is to it's to make it simple stupid. You want to buy an ice cream store, right? And you got to buy an ice cream store that's going to make money, not like buying an ice cream store that keeps diluting you and that sells popcorn, if you get what I'm referencing. Okay, so here we have another Bullseye coming in. This time it has a rocket ship. Those are our quant level models, right? So that thing, you go ahead and study the signal there, and you can see the signal, and it literally shot up. That's the power, right? It's the power of the stock terminal, okay? Let's go ahead and see what else we have. And again, we could go on, right? Again, there are 2,934 results for HIMS, okay? So, our stock terminal has the finger on its, finger on the pulse, right? You can go ahead and go through it and check. These are important news regarding HIMS. Let's see. I don't know. Let's just keep looking. Aren't you curious? I'm not going to be able to flip through all these. It's insane. There's a lot of data here, but. Oh, yeah. Oh, nice. So, November 12. What happened November 12? I'm curious. You see how disgusting Wall Street is? So, maybe this was the Amazon. I'm not too sure. But December 12, the stock was around $26. And there was a large put sweep order. So, our stock terminal picked up that hedge funds are shorting the stock at November 12th. And we got that signal, and immediately, individuals that are astute could have, I'm not saying copy these, but could have like figured out that there'll be a buy the dip opportunity. And the stock literally went from like, $26, $27 down to $19.37. $19.37, ladies and gentlemen. And you can see I'm not lying. I mean, you can see it, here it is. It tells you the time, November 12, 10:59 a.m. And you can see a large put sweep order. And it's just funny, right after that, at a strike, so when it was $27, around 27, where the hell is this? The stock price literally fell right down to $19. So you could see the power of the stock terminal. I mean, you could see it, it's a put. What's a put? It's bearish. It means it's going to go down, right? That's why it's freaking red. It's a red color, okay? Then we got more. We got more put sweeps here, okay? We got more puts. Here's another bullseye. So you remember the other bullseye? Here it is. On November 22, I can't speak, guys. Holy crap. November 22, bullseye was green, meaning that it believes it's going to go up, okay? And you saw it. It gave the signal, and it went up. It went up, okay? Well, now look at this bullseye. This bullseye is November 8. It gave a signal, and it said this thing's about to go down. So here's the signal. It gave, and then there was a put call ratio, and the stock literally, when was it? November 8, and it goes back to even before that too. November 8, which is right around here, and the stock pretty much basically fell down to 19. So again, this is quant level information, right, that we provide. Again, when I say 2.5 billion outputs of institutionally graded data, that's what we stand by. So anyway, I'm done boring you guys. Happy Thanksgiving to you all. For folks that are interested, you can research the other 2,090, 2,936 results. But for folks that are interested, please take advantage of the Black Friday coupon code. It'll be expiring soon. I love each and every one of you guys. I hope you see value into this company, and I hope that you see value in our analysis. We don't bullshit. We say how it is, and we pretty much do real analysis, which unfortunately most people don't do. I'm hearing a lot from the grapevines because I have access to institutional data, but data I can't share because I don't have an institutional license to share that. The only data I can share that have institutional ones is the one I provide. But it doesn't mean I can't take this information and intrinsically make it my own and be able to make a hypothesis out of it. Let me just basically tell you, big money stepping in, and a lot of big money stepping into this company. And I'm seeing a lot of chatter within the grapevines of the hedge funds. I'll leave it at that. Ladies and gentlemen, it's a privilege and honor to serve each and every one of you. God bless you all, and I'll see you on the next one. Happy Thanksgiving.